Hello guys, so I just built what I called the Smart AI Accountant that automatically posts your financial transactions into your journal slash ledger, trial balance, income statement, balance sheet, cash flow statement, compute your tax, compute your cost of goods sold and inventory, and as well compute your capital allowance on your non-current assets. So I'm quickly going to walk you through how it goes. So let's assume we are starting our business with a capital of, let's say, 10 million naira, or let's say 50 million naira. So under the cash flow direction, you select inflow since the money is coming in, and under the description, we select received fund from owner. Let's assume the fund was deposited into bank. So we'll put the 50 million naira here. And we skip purchase quantity, cost per unit, and the day, let's assume it's just 1st of January 2026. So we post the entry. Then our second transaction for the period, let's assume we purchase goods worth 10 million naira. So under the cash flow transaction, it will be outflow. Then under the description, I can now say paid fund for purchase. And the payment method, let's still assume is bank. The amount, so the amount is 10 million naira. So the quantity purchased, let's assume is 100,000. And the cost per unit is 100 naira. So let's assume this took place on 3rd of January 2026. Then our third transaction, let's assume we sold goods, finally sold goods. So inflow, under description, received funds from sales, payment method, let's assume is bank as well. And then we sold goods worth 14 million. 14 million. Quantity sold was 70,000. And the selling price per unit is 200 naira. Let's assume this took place on 10th of January 2026. So click on my post. So let's assume we now incur admin expenses for the period. So it will be an outflow. Under this description, I would say paid admin expenses, payment method, let's say bank as well, bank. So admin expenses, let's assume we incurred 300,000 as admin expenses, and this was incurred on the 31st of January 2026. So I post. Then let's assume we took a loan from a bank. So we took a loan. So for it will be inflow since the bank is giving us fund. And under the description, I will now select received loan from lender, payment method, bank, amounts. Let's assume we took a loan of 1M. So let's assume this took place same 31st of January 2026. Post entries. So I will now show you all the entries that I've captured. Remember all the entries that we captured. I'll show you how it looks on our journal ledger. So this is our journal ledger. So this is the capital, the 50 million capital that was introduced. You can see it automatically debited bank and credited capital. Then it's this is the purchase that we made, 10 million naira. So you can see that it automatically debits purchase and credited bank. And like that for the sales, it automatically debited bank and credit sales. So same thing for the admin expenses and the loan received. So this is how the journal entry will look like. And the amazing thing is that it will also show you for auditory purpose the log dates and time which those transactions were captured. You can see the first transaction we posted was done on this day and at this particular hour, minute, and seconds, and for the rest of the transaction. And the trial balance too, it will show you the trial balance, which is the summary of the account balances in the ledger. So the admin expenses, bank, capital, lender, purchase, sales. And if you go to the income statement as well, it automatically computes, it has automatically computed our sales, cost of sales, gross profits, admin expenses, up to our earnings before tax. So you can see the business is making profit 6.7 million so far. Then same thing for the balance sheet. So these are the assets. We currently do not have non-current assets. So these are the we do not have non-current assets. So these are the current assets so far. The current liability. So our total asset is equal to equity plus liability. So we are on course. Then the cash flow statement as well. So this is the cash flow statement. Let me expand this column. You can see. So it gave us the cash flow from operating activities, cash flow from investing activities, from financing activities as well. And it compared this to the opening and closing balances for cash and bank. So you can see. Then these are tax computation that it automatically computes so far. So the earnings before tax and the statutory deductions and reliefs. We didn't input anything here, so we are just assuming it's zero. So this is the taxable income, which is the earning before tax. And then this is the computation based on the Nigerian Tax Act. So for the 800,000 tax band is zero. For the 2.2 million tax band, the tax due is 330,000. And like that. So the tax that is due on the business is 996,000. So this sheet just simply shows how it computes the cost of goods sold as well as the inventory valuation. So thank you very much.